and welcome to Bloomberg Quint. My guest today is Mr. Satish Pai, Managing Director of Hindalco. Mr. Pai, thank you very much for joining us in Bloomberg Quint. A good set of numbers for the second quarter, despite input cost pressure for you.
Yeah, it's a very good set of numbers for a monsoon quarter, as you said, because this is normally operationally our toughest quarter. I think a couple of things helped us. A little bit, the rupee depreciation helped. Our operations were very efficient and firm. Our volumes were up, so we sold nearly 25 KT more of aluminium than we did in the previous quarter. So as a combination, in spite of the LME being down, we managed to post some very good numbers this quarter.
So, the LME, you're benchmarking the domestic prices to the LME prices, and so it helped you a bit. What kind of challenges do you see with respect to a couple of stuff, input cost pressure, which is there in terms of furnace oil or coal, which is coming in, and rupee volatility? Will that bring in some kind of volatility on your top line as well?
The top line, yes. If the rupee swings up and down, it will. But generally, the rupee has been on a depreciating trend and now seems to have stabilized.
Today, it gained one rupee. Actually.
Yes. So I think that for us, what is really important at the end of the day is that it does not have what I would call wild fluctuations. Any steady trend in any way suits us fine. Now, your question more was on the input costs. I think that for us, the biggest risk for us is the availability and price of coal. So we have gone through a quarter where availability was very tight, and hence we had to go on the market and buy on spot auctions and from traders, and hence our coal prices were up 12% quarter on quarter. Now generally after the monsoon quarter, things get a little bit better. This time, reading in the media, we are still a bit worried because the power demand is very strong, and hence we are worried that power plants will still get favored and preference. So that's why coal is my biggest worry. Furnace oil prices have been on the highest side, but if oil prices, if you have noticed, have corrected down. So furnace oil prices could also correct down.
It comes with a lag, right? Furnace oil. But on the coal front, you're getting into an election season, and so those states will have high power demand, and so the coal would be diverted to those states. What is the strategy you have? Especially Q3 will also see some kind of pressure in terms of input costs coming in, though you have got your coal mine back, but it will take some time to ramp it up, right?
Yeah, I think that when I look at Q3, it will be flat with Q2 because we have already secured most of the coal that is required.
Okay.
So barring that, we will not get coal that is already committed, we should be okay, but it's going to be tight. Now, as a precautionary measure, we have also put in a bit of import as well.
Okay.
So we are getting some imported coal coming in as a backup because we are, as you said, a little bit worried whether we will get the coal that we are expecting.
So you are building up inventory for coal, so that you're tiding over to 2019 without any.
Not 2019, just 2000 and
to January 2019 when things stabilize further. That's what. And what about furnace oil, crude? Is that going to be a challenging thing? Because
crude prices, if they go very high, it has an impact on all carbon related. So I think that currently it does look like slightly to have moderated back to the 72, 73. Now all I can hope is that it stays at this level, and probably, hopefully, not just for Hindalco, for India's sake, the crude oil prices should come down a bit.
But I was looking at the numbers and a strong domestic demand coming in.
Yes.
And is that a surprising thing for you?
Not really. You see, the Indian economy, we have always been very bullish on it. And if you remember last quarter, I said that Indian economy will be growing and that aluminium will grow 9 to 10%. Well, aluminium grew 13 to 14%.
That's right.
So
in the first half, again 14%, right?
Yes, it has been very strong. Now, the unfortunate thing is that majority of this domestic growth has been taken by imports. So imports have gone up H1 to H1 20%.
In Q2, 26%,
yes,
if I'm not wrong.
I just averaged out the 2 quarters for you. So that is our real worry. Indian economy is doing great. The demand is quite strong. And I really worry about imports taking the maximum part of that growth and Indian producers just having to export primary ingot.
I will come to that export thing a little later, but before that, looking at the global demand for aluminium, it's pretty much flat in that sense. 3-4% growth is what is expected in 2018 calendar year. How do you see that in 2019 going? Means we are just 2 months away from 2019.
See, the growth in America has been quite strong. So as you said, the world growth has been 4% compared to 6% last year.
Yeah.
But that's largely because of Chinese growth. So Chinese consumption of aluminium has slowed down. And that is the real concern, because if the trade war continues and the Chinese economy gets affected, then the Chinese aluminium consumption will come down. So that is really the worry that we have.
Do you foresee a situation where the global demand falling below 4% because of China? In 2019?
No, I think that because US is quite strong, India is quite strong. So I think that China has moderated, but I think they have already started stimulus there. So no, I'm not worried it will go below 4. Actually, the world is in a deficit.
True.
So there's 1.6 million tons of deficit
which is
right now.
But that pressure on pricing is not coming through
because of the macroeconomic uncertainty related to trade wars.
And that's a big worry for the industry as well, because despite a deficit in the market, you're not able to push your prices through.
Correct.
So how does players like Hindalco work around such a thing?
No, I don't think you can work around. I mean, what you have to focus on is,
because you look at you have a global issue, then you have domestic imports which are coming in, and now value-added imports are also coming into the market. So that always puts a pressure from two fronts for you.
Yes. No, I think that the basics of our business model is that you should run efficient operations that are cost-effective. Because once you do that, then the only unknown is the top-line realization due to LME or market conditions.
Yeah.
Now, what we have done in Q1 and Q2 is that we have exported a lot.
Yeah.
Because the world demand is still quite strong, especially with Rusal metal not being available. So I think that we have taken advantage of that and exported. What we are hoping for in the short term is that the government would take measures to cut the level of imports, and so that we can take advantage of the Indian market growth.
Are you seeing some way forward from the government of India on that aspect? Because not only you, but even iron steel industry is also asking for the same thing.
Yeah.
They even had a buffer which is no longer effective. That's what they call it.
Yes.
Yeah, this no longer effective because prices are much above that. But still, there's a dumping which is happening. Your industry is facing the same issue with China coming in, and even though US and China have now started the trade negotiations, I'm sure it will go into early 2019 before anything concrete comes in. So for the next 2 quarters, at least you see that pressure coming in, right?
Absolutely right. And I think that, just like the steel industry, we have represented it to the government. And I think that actually what needs to be done is quite clear, in the sense that you have to raise duty on imports, or you have to do something like an anti-dumping that the US did. Or you have to put quantitative restrictions to say that beyond a certain level imports cannot come in. And I think that it's a question of now us convincing the government and the government sort of acting, because you cannot have a situation where imports are going to take, today they are 60%, they were 55% 2 years ago. So if majority of the Indian demand is only going to be met through import, then how can the Make in India work? And how can Indian states like Orissa, Jharkhand, Chhattisgarh, MP develop? Because we have bauxite, we have coal, and these are creating jobs in these states, which are what I call the heartland states. So I think for these states it's important that mining and the aluminium industry is healthy.
From the mining point of view, you got the coal mine. By how much time will you take to again, go back into active production, and will that reduce your cost of coal going forward?
We got 4 coal mines. 3 of them are fully operational at full capacity. The 4th one, Dumri, should come on stream June of next year. So out of our 16 million, we'll get roughly 4 million tons of coal.
Okay.
Now the government has announced auctions again
Yeah.
for coal mines, which is going to happen November, December.
Yeah.
So we are hopeful that we can pick up at least 3 to 4 million tons per year capacity coal mines.
But you got one recently as well, right? The Krishna.
No, Krishna Shila was a linkage.
Linkage.
So we got the 3.1 million renewed for another 5 years.
So will that help you in reducing your coal?
No, we had it before, and
so
it
it's factored in basically.
It's already factored in.
So it's basically the November, December it's auctions which will be key for.
Which will be key for us. It is very important that couple of things. The government should auction more coal mines, and the second important thing is that the government, along with the Ministry of Environment and Forest, needs to set up some sort of a single
window clearance
where you get a mine with the requisite land and the clearances of forest all put in. Otherwise, it's not just us. I think whether it's Coal India or NTPC, if more coal mines don't come into operations, then and the Indian economy grows, power demand grows, we will be caught in this crunch. So we need to get more coal mines activated as soon as possible.
Where is the roadblock for that? Because in the last few years we've seen a lot of auctions happening, and when we speak to industry, they think that auctions have happened, we've got it, but nothing has moved on the ground. We haven't started production from those mines, whether it's coal or whether it's ores, others. Where is the issue? Is it environment the biggest issue? Because I thought a lot of steps have been taken to ensure that there's a smooth, permissions are smooth for when the auctions come in.
So we have managed to get 3 of our mines fully operational, and the 4th one is going on. So I'll tell you, the biggest roadblocks to starting a mine are land and forest clearance. These are the 2 most important things, and these take a lot of time and effort.
But when do you go for auction, aren't these approvals in place? No. So it's a post facto thing which comes in before.
Which is why my original comment that if you can put together the 2 concerned ministries and get a streamlined process of getting these clearances done quickly, then I think it will be good for the country, because the country needs more coal mines to come in.
Imports has always been a concern. Q2 26% for aluminium. Industry has been talking about it at least for now 9 months.
Yes.
More than that actually. Nothing has moved on the ground from the policy point of view. How does the industry tackle this kind of ingress of value-added products, or whether it's alumina or any other thing which is coming into the country, and while industry is categorical to the government about this stress which is coming in, nothing is happening there for you.
Yeah, I think it's a good question. I think that we have worked through Niti Aayog, DIPP. I think the government is very clear that aluminium is a strategic metal for the future. Whether it's defense, whether it's transportation, whether it's fast trains, all of it needs aluminium. It is also clear that India has got a substantial advantage because it's got the 5th largest bauxite reserves in the world. So I think that we are all clear and that the aluminium industry in India needs to grow and be healthy. I think that in the short term, measures need to be taken to protect this industry. And I think that we are hopeful that with the help of Niti Aayog, with the help of DIPP, we will get these measures to be taken, because I think these are temporary problems because of the trade war between US and China. And it's happening because India is the large market that's growing. So whenever the trade wars happen in other places, India is a very easy place to come in, because we are a relatively open country that way towards imports. So I think that just like what steel industry is saying, it is very important that the government at this crucial stage takes the steps necessary to protect the aluminium industry.
On the issue of what you call aluminization, you have been very open and saying that we want to reduce a linkage to LME prices. As we go downstream,
yes,
we'll have value-added products coming in. When do you see that product mix bringing in that margin gain for you?
So, I've also said that it's going to take us, between 3 to 5 years, because...
Are you seeing signs of that coming in?
Yes,
exactly.
Yes, already. But the problem, current quarter, we had to reduce our value-added output. Why? Because imports came in from China and the ASEAN countries. So, even as we try to develop the downstream value-added capacity, in the short term we are having the pressure because it's coming in at much lower prices from ASEAN countries and China. So this is really the challenge. We know what is good for the country in the long run, that India has to develop more and more capability to do aluminium of high quality for the defense, for the auto, for the railways, for the packaging industry. And I think that Hindalco is committed to making that investment and build, because we have the technology of Novelis. We
yes,
can take advantage of that.
That's right.
And I think that we will stick with our strategy. But I think in the shorter term, you're going to run into some thunderstorms because the imports are going to destabilize this strategy.
And so in next 3 to 5 years is when you see when you have the scale, and that brings you scale of economy, then you are able to compete better with imports.
No, but you see, compete. The US is a very developed economy, and it has got a large aluminium downstream industry. America the US ended up putting anti-dumping duties. So you can compete on a level playing field. You cannot compete if, you have inherent advantages being given.
I want to come to copper. You had a scheduled maintenance shutdown, and that brought down some of the volumes for you. But copper is also facing some severe pressure coming in from a pricing point of view. How do you see that that market developing?
See, I think first prices are going to be firm. Demand for copper is strong. But we are a converter business, so the top line copper prices is not what affects us. It's the TCRC, which is the conversion and refining charges. Conversion and refining charges have actually started to stabilize and move upwards now.
Okay.
So I think that for us, we see the copper business this year and next year being quite strong.
How has been the realizations for TCRC?
So the TCRCs are currently running at 23 cents per pound, and we are expecting it to be at that level or slightly higher going forward.
In the next couple of quarters?
Well, the Shanghai benchmark setting of TCRC happens in November.
Okay.
Because it's set in Shanghai because China is the largest
one.
So from the market conditions, we are seeing that it is probably going to be flat or slightly up.
And also the demand in China is also coming down a bit, right?
True, but that is just like aluminium demand. So that's why I think that the Chinese government is now going to give a stimulus. Otherwise, if the Chinese economy slows, then it will have a big impact on copper, aluminium, steel, all pricing.
On the Novelis front, how is the entire new acquisition funding coming through?
So we did announce today, both in the Novelis press release and the Hindalco press release, that we have finalized the financing. So all the 2.58 billion that is required on closing, we have now finalized with a consortium of nearly 20 banks.
Okay.
The financing has been finalized.
Okay. And you expect the entire deal closure as per schedule?
So
because regulatory approvals are something which is...
Yeah, our schedule, we have said 9 to 15 months.
Yeah.
So we are expecting now maybe April, May of next year.
And by then you're expected to get all the approvals in place.
Yes.
The China thing is also you are investing there to double expand capacity
China,
there.
yes.
But it's coming in at a time when their demand is a little bit subdued in that market. Is it a capacity builder for the future?
You see, fundamentally aluminization in auto is going to continue. China is going to be the world's largest electric vehicle market by far compared to anyone else, and probably at the fastest speed. So electric vehicles are 60 to 70% aluminium. So I think that for our facility, we have a 100 KT facility in Changzhou and we are expanding it to 100 KT. We are quite confident of fully utilizing that capacity.
How do you see the demand coming? Because you said auto is one of the biggest thing, and we were looking at some of the numbers of JLR that came in yesterday.
Yes.
Bad set of numbers coming from China. Premium cars not selling, heavy discounting which is happening. That brings in pressure on some of the producers as well, because it as OEMs reduce prices, the input costs, the pressure will come in automatically to the input cost coming there. Where is the demand situation? How do you assess the demand situation? Because that's a very red flag which is coming in from that market, right?
I think it's a valid concern, but again you have to realize that today aluminium is a very small part of the auto market. Our customers tend to be either electric vehicles or the heavier high-end cars. So generally what we are seeing is that the pull for our metal is not going down dramatically.
Okay.
So yes, you can have one quarter where car sales go down, but our demand, Novelis's aluminium output was up 9% Q2 to Q1. So we continue to see strong demand for aluminium. And we are quite confident that in the long run, the aluminization of the automotive industry is going to continue. So you may have little speed bumps here and there, but our strategy of building more capacity for aluminium for autos, we will continue with that.
How does everything now help the balance sheet? Because you have been able to bring down the net debt to EBITDA levels as well on a consolidated basis, and you paid some 1,500 crores in October. 1,575 crores you paid. What is the plan of reduction of debt which you have for FY19?
So I think that our net debt to EBITDA at the Hindalco India level is 2.47.
Yes.
And at the consolidated level is 2.8. So we have a very healthy balance sheet now.
Yeah.
I think that, as we generate cash, we will utilize it for our capex plus dividend. And then if there is still cash being generated, our preference would be to pay down more debt because interest rates are going up. So if you see, our net income is 54% up quarter on quarter. That's because, yes, EBITDA is good, but also our interest costs are coming down. So
but the cycle is turning now, right?
Interest rates are still going up. Unless interest rate starts to go down. I haven't seen that yet. But worldwide and in India, interest rates are still up.
But that will impact your interest costs going forward, right?
Exactly. That's why we would like to pay down debt.
Okay.
We would like to pay down debt.
But by how much for FY19? Is there a plan
we want to get to about a 2.3 net debt to EBITDA by March of next year.
This is for standalone entity?
This is for India.
Which
is Utkal
plus Hindalco, which is there. 2.3 times.
On the Novelis side, there is not much opportunity to pay down debt like in India, because you have a large part of it which is in long-term bonds, which we got at very attractive 6% rates. And then we did a refinancing of the term loan, which we got at LIBOR plus 135 bips, I think. So I think that the debt of Novelis now is fairly at a very low cost. So as the EBITDA of Novelis goes up, the net debt of EBITDA of Novelis will come down.
What happens when the entire financing is done for LRS and 2.58 you have already tied up, so the costing you already have with you?
But that's for the closing. But 1.5 billion of that financing is a one-year bridge loan. So once we close LRS, then we will look at we will call back the LRS bonds because they're at very high coupon rates, and we will refinance them at the Novelis rates. And then the remaining part we will see, do we use a certain part of our cash that is on the balance sheet, or do we do another term loan So looking at the market conditions, we will decide how to finance that.
So what would be on a consolidated basis the net debt to EBITDA for the FY20, 19-20?
So what we have guided at console level, it will be at around 3.5.
It will be well within that?
It will be at around, right now we are at 2.82 console. Yeah. After the acquisition, we are saying it will probably be around 3.5. Okay. And within 2 years, we'll bring it down below 3.
Mr. Pai, you've been answering all the tough questions. No. Thank you very much for joining us on Bloomberg.
Thank you very much.
Thank you.
Thank you.